Well, the commodity markets have begun trading, and since this is such a big commodity day, let's look at how crude has opened in particular. Crude, okay, finding its feet. Actually, the Indian markets were open yesterday when crude was falling, so some of it has gotten adjusted. 2,500 thereabouts is where MCX crude is opening. Gold is taking yet another beating. 25,400 odd is where that commodity has opened, and that's copper for you. Again, a marginal green tick. Let's get to Naveen Mathur of Angel Commodities to give us the first strategies on all these commodities. Naveen, good morning. Thanks a lot for joining. First, gold. How would you trade that?
Hey, good morning, Lata. We trade on the negative side for the gold. Looks like to be bearish because all the fundamental reasons are pointing towards the weakness in the gold prices. Although after the ECB meeting last week, we did saw a bounce back because of the dollar depreciation. I think the gold remains on the bearish trend, and it's widely expected that the Fed would increase the interest rate, and I think that is what is leading the dollar index on the higher side, and thereby the gold on the lower side. So I think the strategy to sell the MCX gold contract on February month at around 25,600 to 650 would be a great strategy. Stop loss we maintain at around 25,800 and target at around 25,300 to 25,250.
Naveen, after the big gash in crude prices yesterday, today it's stabilized. Would that be an opportunity to go short?
Yeah, I think the markets are oversupplied and we don't see anything happening on the positive side for the crude oil. The fundamentals are negative. The last meeting of OPEC nations to cut, means to see to it that what strategy they adopt in this particular meeting remain uncertain, and they didn't do anything. They are maintaining 31.5 million barrels a day kind of a production. So I think with the oversupply and a warmer than normal weather in the US, I think will lead to a lower demand for the crude oil even in medium to short term. But intraday also we feel the markets to be trading on the downside, and currency factor would also weigh on. So sell the crude oil contract on December at around 2550. The stop loss to be maintained at around 2620 and targets on the sides of 2480 to 2450.
All right, we'll leave it at that. Thank you very much for joining us with your strategies on crude and gold, Naveen. It is, again, an IPO rush time. Like we told you, the other IPO that's looking to get investor attention is Dr. Lal